Guys, are you able to hear my screen? Can you all see my screen? Guys, can you see my screen?
Yes, sir.
Okay.
I can from my side.
So now I just want us to quickly look at introduction to Forex, guys. There's a reason why you started Forex, and there's a reason why you're still pushing, even if you are losing money. So I want us to look what is Forex, currency, brokers, bid and spread, trading section, type of traders, how to win in Forex, and ways to analyze market. Okay. We'll start at what is Forex, guys. Forex, it comes from what we call Forex, it comes from foreign exchange. Sometimes they say is FX, is buying and selling another currency at the same time. Is the largest financial market in the world. It moves based on which currency is stronger. So the word Forex is the first three letters of foreign and two first letters of exchange. That's the word Forex comes there. You can say foreign exchange. So the word Forex comes from foreign exchange. The three first letters of Forex and two first letters of exchange. That's when they got Forex. And FX comes from Forex, first letter and last letter. That one is simple and clear, guys. So when we trade, we have currencies. We have 8 major currency, which they are most traded currency. They all have USD. So USD is the major currency. So they are demanded a lot. So that's why they are called the major, because most people trade them. It's your Euro USD, USD JPY, GBP USD. Those pairs, they're major currency because they have USD. And you have minor currency. Are those currency that don't have USD, like CHF, JPY, NZD, GBP, CAD, JPY. They don't have USD, so they are minor currency. They are not traded that much, but they are traded. And we have exotic pairs, like they are less traded, they are not demanded, like your USDs are, Euro JPY, those pairs, USD Mexican, they are not much traded. So they call the exotic pairs. You understand three types of pairs do we have? We have the major pairs, which is 8 currency pairs. They are most traded and they include USD. We have minor pairs, they don't have USD, and we have exotic pairs, guys. Ne? So when you come to Forex, this is what you're gonna use to trade. So when we trade pairs. So why they call them pairs is because it's 2 different currency. So when they pair them together is a pair. And for us to trade, we need what is called broker. Broker, they provide us with a platform to trade. They act as a middleman to execute your trade. You understand? For you to make a trade, you need a broker. So we have a good broker and a bad broker. A good broker is a broker whereby, for example, if you're selling your car for 10,000, they will sell that car on your behalf for 10,000. But a bad broker is a broker. If you sell a car for 10,000, they will sell it for 12,500, and they will take that 2,500 without you even knowing. So sometimes you place a trade. Bad brokers, they don't place it where you place it, they will place it somewhere else, because they know the 90-90 rule, that 90% of forex traders, they'll lose 90% of their funds within the first 90 days. So when you open a trade, brokers, they make money. When you close trade, they make money. Whether you are losing or winning, they always make money. So what do? They offer you a leverage. So remember, like Forex, it's not for the individual, it's created for big banks, institution, and all those people with trading with a big amount. So with us, we're gonna come to trade forex with 100 rand, less than 1,000 or less than 10,000. It's not for us. So a broker will give you a leverage. Leverage, it allows you to trade with your 1,000. It allows you to trade funds that are more than 100,000. They give you a leverage. So they want you to risk more. And they know if you lose, you will lose more. So when you open your trading account, you know they give you a leverage. You choose what leverage you want. If you take 1:50, you know you're gonna make a small profit and you're gonna lose small. But when you take 1:500, it is easy for you to make quick profit, a big profit, and it's quick for you to lose a lot. So they charge you spread, bid, and ask. So what is spread? Spread is the distance between buying and selling. When you open a position, it doesn't immediately go into profit. It starts at minuses. So that's what we call a spread. You have to pay the spread first before it goes into profit. We understand, guys? We understand what is spread. Spread is the difference between buying and selling. Buying and selling is bid and ask. So it's like a distance. Before you go into profit, you must pay a spread. So that's amount that you pay for opening your position. We have trading session, guys. We have London session. It open at 7 a.m. to 3 p.m. South African time. And we have New York session. It opens at 12 to 8 p.m. So New York opens while London is still opening. And we have Sydney session from 8 p.m. to 5 p.m. And we have Tokyo session from 10 p.m. to 11 to 6 a.m. So now, because it's Sunday, we at Tokyo session, we here on this session. So on Sunday, it starts at Tokyo and it will go to London, New York, Sydney, come back to Tokyo. So Sydney and London, Sydney and Tokyo, they are less traded, guys. So that's when you have position here, it doesn't move. That's when markets start to correlate on these two sessions. And because there are no more people, there are no many people trading it. So the spread on this session, they become bad. Like I said on our session, on the first session, like my account just blew because of the spread. Like when market open, because there are no people who are trading a lot, the spread becomes high. But when there's much volume of people, the spread become less. We'll go on another one. So I will advise you to trade London and New York sessions. So that's why normally at 6 p.m. I prefer to close my trade. I only trade London and New York. These two sessions, they are not a go zone for me, guys. For you to know what type of trader you are, we have 4 type of traders. We have the scalper, we have day trader, we have swing trader, and we have position trader. So the scalper is like people, you open your position and close it within a minute or 5 minutes. So you have a lot of time to check the market. Like you can sit from market from 7 a.m. until 6 p.m. Like you don't move. You are looking at the market. So it's a good thing is that you can make profit now and then. But the more you open your position, the more the brokers make money. Each time you open position, they make money. So you're gonna open many positions and the brokers, they're gonna charge you more. And another thing, you must have enough time to be on your screen, because you are trading small time frame. You don't trade 1 hour going up, you trade less than from 30 minutes going down, maybe 5 minutes, 1 minute. That's where scalpers, they are trading. That's their trading time. And we have the day traders. So day traders, they open position for hours and close it before the end of the day. So you are in intraday, so you are trading the whole day. So you're using a time frame, let's be from 1 hour going up. So you can open a position at 7 and you can close it later, maybe at 5. You don't hold your position to the next day. So if you hold position to the next day, they will charge you what they call swipe. It's a swipe fee, like holding a position overnight. They charge you a certain fee. Then you have swing traders, like they open position. Let's say they open on Monday and they can close on Friday. Like those position I did open them on Monday, but I didn't close on Friday. I was expecting to open it for a longer, and you know, market just stopped me out. I'm still recovering from that, guys. And you have what we call the position traders. They open position for weeks to month or even a year, like George Soros. He's known for this famous say that once he buys a stock, he buys it forever. Once he press a buy, he buys forever. He never closes. Those are the position traders. Another thing, how to win in Forex, guys. This is what is most important. So what successful traders are doing, one, they have a strategy. Two, they have money management. And three is psychology. So your strategy only consists of 10%, guys. For you to win, your strategy only consists of 10%. Your strategy is either you are trading other blocks, you are trading support and resistance, you are trading impulse and correction. That is your strategy. You are trading candlesticks, maybe you are using indicators, Fibonacci, moving averages. That is what we call strategy. And on that, you need a money management. What we mean about money management is whereby you say, okay, if I'm using a leverage of 1:50, 1:100, 1:500. When I open a position, depending on my account size, let's say you have a small account size. So when you open a position, once you are in that position, you need to know how you're gonna manage it. You need to have your stop loss and your take profit. And let's say you are risking 1% to make 3%. And what type of lot size you're gonna use? You're gonna use 0.01 or 0.5. That is what we call money management. And once market moves at least away from your entry, you say, okay, I'm gonna put my stop loss at my entry so that when market comes, it will take me out at break even, won't take me out with that 1%. That's what you have on your money management. And the most important thing is psychology. Psychology, guys, it will take you where you want to go. Believe me on this one. What we mean about psychology is your emotions. When you are in a good trade, you get excited. But when you are in a bad trade, like your emotions kick in. When we're losing, we don't want to close those losses. We want to hold them and hope that, okay, market will reverse. But when we're in a winning trade, we close those small trades and we say, okay, it's better to take small profit than to take a loss. But if you continue doing that, you will take small loss. But when you'll take small profit. But when you take one big loss, it will wipe away your account. So your money management and your strategy, they are no longer working because of your psychology, because you're closing your position too early when you are winning. But when you are losing, you're holding those losses because you don't want to be wrong. It's good to be wrong, guys, and you rectify that. So for us to make money, guys, we have to analyze the market. And there are only 3 ways we're going to analyze market. Is technical analysis, is fundamental analysis, and is sentimental analysis. So with technical analysis is whereby we look at the chart and we study the price pattern. Fundamental analysis is whereby we look at news. Like we look at news, okay, what news are saying, so we trade fundamental. And sentimental analysis is more like the opinion. If let's say we have the Minister of Finance that will be talking today, then we start to ask, okay, what the minister will he or she will be talking about. That is sentimental analysis. We trade based on people opinions or views. That's sentimental analysis, but it's not that important. So I want us to look at technical analysis, guys. I want us to look at technical analysis, because technical analysis is the most important one that we use in Forex. Okay, before I continue, guys, any question you want to ask on what we just covered now? Anything you want to ask? Let me hear your questions, guys. I know I'm moving too fast ahead, but that I will save it as a PDF and then I will send it to you guys. And this session we are having, guys, I'm recording them, then I will post it on YouTube. So you can go back and check them again to refresh and learn, guys. You can't capture everything now, but the more you go and watch them again, it will give you more questions. Okay, if this is happening, what I'm expected to do, guys. But for now, I just want to hear from your side, and especially on how to win as a Forex trader. That's where I'm expecting questions from you guys, like why are you making money and why are you losing money? Is because of your strategy, is because of money management, or is because of your psychology? Can you focus on those three now, guys? I want questions. Or okay, I'm asking you questions. Why are you making money and losing money? So I want to get answers from you guys. Let me check, who do we have here? Check your names, guys. Anyone who wanna come first?
I think psychology is a problem.
Come again?
I'm saying for me, I think psychology is a problem.
Okay,
That's why I lose money.
Psychology is big. So if you saw
Yeah.
psychology, it takes about 60%. So when you say psychology, what do you actually mean? Is when you jump to take trade early, or your psychology when you are in a good trade or when you are in a bad trade. So you have to at least elaborate on that when you say psychology, because psychology takes 60% of your success.
Yeah. No, I think when I'm losing, I tend to stay longer to regain what I've lost on a trade.
That's what we call like using a hope and you become greedy. You don't want to be wrong. It's good to be wrong.
Yeah.
At least losing small than to be wrong, losing a lot.
Yeah.
Another one, guys.
Okay.
Another one, guys. Don't be afraid to talk. It will help you someday. Don't be afraid to talk, guys. So meaning, guys, we're not losing, we're all making money. Our psychology is 100%.
We
We're winning. Like I just told you, like I just blow my account now. I told you I just blow my account now. Like from, yo, remember that account I was trading from 150? It was now at 1,100. It just flowed now when market open. So I know what happened. So I know from now on I will never take swing trade. I will rather close on Friday. I will close all my trade on Friday. But then that doesn't discourage me. I'm still gonna continue. Guys, let's talk. Talk to me. It's not only one, it's not Nati only here. See, we have 6 people. Okay. Talk to me, guys. Paul.
Oh yeah. Well, I like to say I relate to what he just said.
Yeah.
Instead of closing them earlier.
Okay.
Yeah. That's one of the problems. And I realize that I do have that problem, but as from now, yeah,
You
I'll
will
take
work
a
on it.
close look at it.
Okay. Galaxy A21. Guys, unmute yourself. Nico.
Hmm? Hello.
Yes, Nico. Talk to me.
No, I'm listening.
Yes, you've been listening. Talk to me.
No, there's nothing much I can say because that was the psychological thing for me. Like, early entries and early exit. That was the problem. But yeah, I've been trying to sort them out.
Okay.
Entering the market very early and exiting the market very early before reaching the target because I wasn't aware of where to place my target and where to enter the market. You understand? So
Yeah.
that was the problem. But anyway, for now, I'm sorted because that was the huge problem in front of my success.
Yeah. You saw on that video I posted on YouTube, like we're talking about where to make your entry and where to exit.
Yes, that's like actually I can say last week we went through it and it was clear. Actually, long before last week we tried to sort it out because that was the problem, and it was like a stumble block to my trading because I was like just trading without knowing where to put the trade, where to take the trade and where to exit the trade, which was a very challenging thing because once you don't know where to enter and where to exit, it's like you're not trading at all. You are better than not trading.
Yeah.
Mm-hmm.
Okay. So guys, I want us to look at technical analysis. So with technical analysis, because it's the most important, like if I can ask you tomorrow at 11 p.m. what I will be doing, I hope you will all be able to answer me. If I'm saying, guys, tomorrow at 11 p.m. what I will be doing, can you answer me now?
Yes.
Yes. Tell me what I will be doing tomorrow at 11 p.m.
11 p.m. will be on Zoom.
At 11 p.m. I host Zoom session.
Yes, we'll be on Zoom.
Yes, that is more like a technical analysis. How do you know that I will be on Zoom? It's because I've been doing that for the past few days, few weeks.
Mm-hmm.
So if I can sit with you for a month and study your moves, like what time you wake up, what time you sleep, what time you eat, what time you go on lunch, what time you go on to work for a month, then the next month I will able to tell you, okay, Nico at this time will be doing 1, 2, 3, 4, 5. Guys, if like maybe you're going to work or you're going to school, like there's this taxi or this person you're gonna meet at stop sign. When you don't meet that person or that taxi, it's either you are late or you are early, or that person didn't go to work, or that taxi is not passing. Like it's something that you see almost every day. That is technical analysis. So with technical analysis, market tends to repeat the same things because market is traded by people. So people behavior, they are predicted. So we know if market is doing this, it will do it again because it's moved by people. It's moved by people. So we know, okay, market is pushing up. So when market got here, it failed to go up. It went down. So for me, how did I know that, okay, now we're looking for for selling opportunity is because it failed to make a higher high. It make a higher low. So for me, I know that we're going on a downside. We're going down. This is technical analysis, guys. This is pure technical analysis. It's because market is traded by what? By humans. So human behavior are the same. Human behavior is what is the same. Let me show you something again. Okay, this is we left with last 10 minutes, guys. So this will be our last session, guys.
But you're gonna put this on YouTube.
Yeah, I'm gonna put it also on YouTube, guys. I'm gonna put it on YouTube.
Okay, cool.
I'm gonna put it on YouTube. Must check those videos on YouTube, guys.
Okay.
We can see here where the double bottom and market did push up. We also had a double bottom here and market did push up. It's because this is traded by humans, guys, and human behavior, it become repeated each and every time. So that's why we say, okay, when we trade, we're looking for repeatable patterns. We're looking for something that happened before. And we know when it's happening again, what we're gonna expect. That's why when we see inverse head and shoulder, when we see head and shoulder, we know what to do because it's been happening for a long time. It's been happening for a long time. We can see here. Here we can see same thing here. Same thing. It's same thing. So this is repeatable patterns that we're looking at when we trade. This is technical analysis. That's why technical analysis is so important. It's because it's human behavior. They are repeating the same thing, guys. They are repeating the same thing over and over again. Here is again a inverse head and shoulder here. So it's happening more. It's happening more. So once we see this, we know what to expect. Once we see this, here we have a double bottom. And this double bottom, it was a falling channel. So once we see this thing, guys, we know what to do. My network is a little bit slower, guys. But I think I covered the most, guys. I think I covered the most. Oh, Nasdaq is dropping. You can see like Nasdaq is starting to drop, guys. So guys, for me on my side, I will say, guys, focus on having a plan. Try by all means to follow your plan. And if you deposit 500 and you make 500, withdraw your initial deposit and trade only with profit. So you're gonna try to reduce your emotions. You're gonna try to reduce your emotions. So Nasdaq, we can see, guys, is going down. So maybe it might come to this level. Maybe it might come to respect this level. Maybe it might come to this level. Guys, I think I've covered a lot. Yeah, I think I've covered a lot from showing you how to analyze. So from now on, I want you guys to tell me, what do you want me to cover? So I should prepare for you guys. What do you want me to cover for you guys? Anything you want us to cover, guys, tell me so that I can prepare it for you.
I still want to see some more technical analysis.
Analysis. Okay.
Yeah, analysis. I think I still need to see some of the.
Okay, no, we'll keep on analyzing, because without analyzing, then we will not have a direction of a market. We'll keep on analyzing.
Yeah.
That one we'll keep on doing. But the way I'm so used to analyze is even start to be boring. You know, when you repeat same thing over and over.
No, it's understandable. It's understandable.
Sometimes I don't even have to analyze. I just open and I can tell you, okay, now we're selling.
Going this way.
Yeah, now we're selling or buying.
Yeah,
Like,
yeah.
it's so boring,
Yeah.
guys, to analyze. Nico's been coming a lot. Like, he knows, like, analyzing for me now is boring, guys. I don't want to lie. But guys, go on
No,
YouTube,
it's
guys.
understandable. Understandable.
Go on YouTube and check those videos, guys. Like, yeah, they'll be able to help you, and then you'll have questions. Will come and ask me. Then I think I have a video of the first video of Nasdaq buy strategy, and I posted another second video of Nasdaq. Then we'll have another Zoom session whereby I will show you another strategy that we use. So I'll be giving you, it will be that strategy, guys.
Okay. No, you know what? As long as you post videos, then we can look at the videos and come back and ask questions.
Yeah.
Yeah, I think it's better that way, so that we can also give you a chance not to get bored with this analysis.
Oh, guys, like analyzing
Yeah.
I don't want to lie, like it's boring.
Yeah, no, it's fine.
Yeah.
We'll look at the video. We'll look at
Okay,
the
guys.
video.
Yeah. Look at the videos, then we'll continue, guys. Okay, guys. Yeah. But I will be looking at my head maybe until 3 o'clock. Then I will sleep, guys. Have a good trading week, guys. Don't forget to start small, and we'll get you somewhere, guys.
Tabo,
Yebo?
which pairs are you looking on?
Okay, me, I'm still focused on this pairs, because some of them they didn't finish my setup, so it's still a chance for me to focus on them. Let me tell you. Yeah.
Or you still want the setups, ne?
Yeah, I still have, so that, like, I don't wanna like I said, analyzing it's so boring. Like, I didn't analyze any pairs for this week. I said, you know what, I will continue with those pairs I had. There's GBP.
This weekend, the same, yeah.
It's GBP, CHF, GBP CAT. Where did I write them? Like, I'm still focusing on those pairs, because as GBP CHF, GBP CAT, USD CAT, Euro AUD, NZD CHF. Okay, let me start. It's GBP CAT, ne? I'm looking for buying opportunity. GBP CHF, I'm looking for buying opportunity.
Okay.
Euro AUD, I'm looking for selling opportunity, but it did go down. NZD CHF, I'm still focusing on this pairs. NZD CHF.
Okay.
USD CAT, AUD CAT, and CAT JPY. So I'm still looking at this pairs. You see, they're still gonna complete my setup.
Meaning I'll catch up with you around 8
a.m.
in the morning. Yeah, 8 a.m. I'll be on chat, but I'll be. It's just that you made something. I was about to do it. You did finish Nasdaq, so that's why I'm not on the chat right now. You did finish it, and I did went through your steps, and it was like wow. So now I'll check around 8. I'll be on GJ. I will check. Yeah, I will check GJ.
Okay, okay, no problem, guys. Okay, guys,
Because-
we'll
But here is it. Do you have it on your list? Or
No, I
is
don't have
for-
it
is
on my list.
Is it done with this? Is it done with the setups?
GJ, okay, I will check. What time you sleeping?
I'm not sure. I'm still awake.
Okay, yeah, you will